I know that higher inflation and interest rates cause anxiety and concern for many families. That's why the government is already supporting families with one of the largest support packages in Europe, worth £94 billion, or £3,300 per household on average. As interest rates rise, I will not take action that undermines the Bank of England's monetary objectives, but where there are non-inflationary measures we can take to relieve the anxiety faced by families, we will do so. That's why on Friday I met the UK's principal mortgage lenders alongside senior representatives from the Financial Conduct Authority and UK Finance to agree new support for people struggling with their mortgage payments. At that meeting, I secured agreement from lenders to a new mortgage charter, which we're publishing today, that sets out what support customers will receive. It's been signed by lenders covering 85% of the UK market and provides support for two groups of people in particular. The first group are those who are worried about their mortgage repayments. If they want to switch to an interest-only mortgage or extend their mortgage term to reduce their monthly payments, they'll be able to do so with the option of switching back to their original mortgage deal within 6 months without any affordability check or credit score impact. For most people, the right course of action will be to continue to make payments on their current mortgage. This will always be the best option and will always mean you pay less interest overall. But this new measure means that people will be able to opt for a lower cost approach for 6 months with full reversibility, giving people the peace of mind of knowing that they can try out a new approach and still change their minds later. This measure will take effect in the next few weeks and means that for a homeowner with a £200,000 property with a £100,000 outstanding on their mortgage over 15 years, they can change their payments with no immediate impact on their credit rating by extending the mortgage term by 10 years, which could save over £200 a month, or moving to interest-only payments, which could save over £350 a month. A further measure for this group of customers means that if they're approaching the end of a fixed-rate deal, they'll be offered the chance to lock in a new deal with the same lender up to 6 months ahead. However, they'll still be able to apply for a better like-for-like deal with the same lender with no penalty if they find one until their current deal ends. This will provide people with more flexibility and optionality to find the best deal for their circumstances. The second group of people we are supporting are those who are at real risk of losing their homes because they fall behind in their mortgage payments. Mortgage arrears and defaults remain at historically low levels, with under 1% of residential mortgages in arrears in 2023, and at a lower level than just before the pandemic. Nonetheless, for the families involved, it is extraordinarily distressing to lose your house. So we want to do all we can to support people who find themselves in such a challenging financial position. As part of our strong regulatory framework for mortgage holders, banks and lenders already provide tailored support for anyone struggling and deploy highly trained staff to help such customers. Support offered includes temporary payment deferrals, part interest, part repayment, as well as extending mortgage terms or switching to interest-only payments. To supplement that, we've agreed as part of the mortgage charter that in the extreme situation in which a lender is seeking to repossess a home, there will be a minimum 12-month period from the first missed payment before there is a repossession without consent. And anyone at all who is worried they could be in this situation should know they can call their lender for advice without any impact whatsoever on their credit score. Lenders will also provide support to customers who are up to date with payments to switch to a new mortgage deal at the end of their existing fixed-rate deal without another affordability test, and provide well-timed information when their current rate is coming to an end. Taken together, these measures should offer comfort to those who are anxious about the impact of higher interest rates on their mortgages and provide support to those who do get into any extreme financial difficulties. The mortgage market itself remains robust, and the average homeowner remortgaging over the last year had close to 50% loan to value, indicating most people have considerable equity in their homes. Mr. Speaker, tackling inflation is the Prime Minister and my #1 priority. We said we would halve inflation, not because it was an easy thing to do, but because it is the right thing to do. And we won't flinch in our resolve, because we know getting rid of high inflation from our economy is the only way that we can ultimately relieve pressure on family finances and on businesses. And that is why we will seek to remove inflationary pressures in our economy and not stoke them. That is what the measures I have set out today will help to do, and I commend this statement to the House.